GameStop stock price doubled in price in just a couple of days, and I have been getting a lot of questions regarding this stock. Is it too late to invest? If you are already invested in GameStop, should you take profits? Some people have been asking me about my own exit strategy. When do I plan to take profits on this? Is it time to even short the stock? These are the things we are going to discuss today, and we are also going to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for 136 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. I have been saying that there are two main catalysts that would drive the stock price of GameStop. Number one is the launch of the new PlayStation and the new Xbox, and number two is the consequent short squeeze that will happen because of that. But the recent gains in GameStop stock price is not because of either of these catalysts. It's actually for a third reason. Ryan Cohen, who is the founder of Chewy, invested in GameStop. He bought 9.6% of the company, so about, let's say, 10% of the company. If you don't know about Chewy, it is an online retailer which sells dog food, pet food. And then eventually the company was sold to PetSmart, and the company last year went through an IPO. So after Ryan Cohen, the founder of the company, made money from that sale, he was able to diversify his investments. Now most of his investments are not in Chewy stock. Most of his assets actually are in two companies, Apple and Wells Fargo. It seems that he's a great fan of Warren Buffett, investing in these two companies. So he put a lot of money on Apple and some money on Wells Fargo. And so far, his investments in Apple have been doing great, because since 2017, Apple stock price gained over 250%. He's currently the largest individual shareholder, retail shareholder of Apple, owing about 800 million US dollars worth of shares. But now it seems he wants to diversify away from Apple and Wells Fargo into a third stock, GameStop. He bought about 10% of GameStop in a period of 2 weeks. And we can see on the 21st of August, he bought 300,000 shares of GameStop. And on that day, I posted something on my Instagram stories. I said, I don't know what's happening, but it's really beautiful. Because on that day, the stock price of GameStop was skyrocketing. But now we know what was happening. Someone was buying a lot of shares of GameStop on that day. The good news is that he doesn't want to be a passive investor. I believe that most people should be passive investors in some way, because most people are not good enough to analyze companies. They don't have the time. It's not that they are not good enough, it's that they don't have the time to make the analysis, and maybe they are not good enough. So that's why I believe that most people should invest in ETF or even in only big companies. But for people who wants to do research, of course they should do research. But those people who are doing research, as far as possible, if they can be an active investor, I think it is better to try to change the management to do something. So if they can improve the company in which they are investing in, I think this is a good thing. I'm not telling you to go 100% to be an activist investor, because activist investors, they want other things. They want shareholders to make money. But if you can influence the company and make it better, I think it is good. And here, the founder of Chewy, which was a successful online business, this business was able to compete with Walmart, with Amazon. Now this founder, Ryan Cohen, wants to help GameStop, because GameStop is a struggling business, especially when it comes to online sales. You will see reports that their online sales skyrocketed when there was the pandemic. It's true, but you also need to consider that online sales do not contribute much to the total sales. So even though they had a lot more of online sales, when you consider the fact that normal sales in stores went down, it's not really such a good news. I don't really know, of course, if he will be able to bring a change to GameStop, improve the business. I really hope he does it. But I personally like the fact that he is here. Now he's backing the company. He is trying to improve things in the company. This is something I like. But this is not the reason why I invested in GameStop. I did not invest in GameStop because other people are investing. Michael Burry last year invested in GameStop. I was happy about that, but I was not investing in GameStop because of Michael Burry. I invested in GameStop because of my own analysis. When I look at the balance sheet of GameStop, I look at the other financial statements of GameStop, I look at the business, I saw that it was a deep value stock. It was a cigar butt stock. the business is failing. This is the meaning of a cigar butt. The business is failing, but you can still make money on that stock. And if you're going to read the letters of Warren Buffett when he was managing his partnership, especially, because now as CEO of Berkshire Hathaway, his moves are limited. But when he was managing his partnership in his late 20s, you are going to see that there was a lot of those cigar butt stocks. So those are stocks that maybe are failing, yes, but there's still money to be made on the stock. Well, I will give you the example of GameStop itself. The company has only one big debt. It's $475 million. It was due in March 2021, but they were able to move it till March 2023 by 2 years. So they extended the maturity of the debt. But they also had to raise the interest on the debt, of course. It was 6.75%, now it's 10%. It's not really such a big deal because now they have more time to repay this debt. But if you consider that for the next 3 years, okay, 2.5 years, GameStop doesn't have to pay any debt. But in these 2.5 years, the amount of free cash flow that GameStop can generate will be enough for them to return money to shareholders, to buy back shares, and at the same time repay part of the debt. Because we need to understand that GameStop is a cyclical stock. In November, Sony is going to launch the new PlayStation. Microsoft is going to launch the new Xbox. And you see that whenever there are new consoles, the sales of GameStop are going to increase. When sales go up, free cash flow goes up. And the increase in sales doesn't have to be much. Only a small increase in sales can generate enough cash flow because GameStop has been improving their bottom line. They are losing less money than they were losing before. So I believe that GameStop over the next, let's say 2.5 years, can generate more cash flow than its current market capitalization. So all this money can be used to repay the debt, and they also have cash. They have more cash to repay all the debt. So they can use the cash to repay their debt, and the money that is left, because of all these activist investors on the board now, there's Michael Burry, there is Permit Capital, Hashtag Capital. Activist investors, they want only one thing, to return money to shareholders. I believe they are going to make a move so that GameStop pays a dividend or even buy back more shares. If this happens, of course, this can only send the stock price up, and eventually, sooner or later, maybe I'm going to take my profit if it becomes too expensive. But if over the long term I say that GameStop business is improving and really maybe they can compete with Amazon in the future, who knows, then I'm going to hold on the company. Because right now, when people are asking me about my exit strategy, I tell them that I have multiple scenarios playing in my head, but I don't know which one is going to happen. Because this business is changing so fast right now. There's so much happening to this business that I cannot tell you precisely what's my exit strategy. Of course, I have the plan. There is a probability of this happening, of that happening, of that happening. I have the plan. I know what I will do when things happen, but I cannot tell you definitely what is going to happen and what I will do. If things really improve with GameStop, of course, investors will rush to this stock, are going to buy the stock if the company pays a good dividend. But it's not new investors who are going really to move the price. It's the old investors, especially the negative investors, the ones short selling the stock. Let's do some math. We say that Ryan Cohen owns 10% of the company. Michael Burry owns 4% of the company. Hashtag Capital and Permit Capital owns 7% of the company. The insiders of the company own 14% of the company. So we have 35% owned by these four big groups. The total amount of shares of GameStop being shorted right now is 85%. So 85 plus 35 is 120%. So you see the math doesn't add up. So how is it happening? Is that those hedge funds who own GameStop, maybe even Michael Burry or Hashtag Capital, what they're actually doing is lending the stock that they own to the short sellers. But what the short sellers do not realize is that they are digging their own grave. They think they're going to make money, but what they are doing is digging their own grave. Because now GameStop is in a situation where 85% of the shares outstanding are being shorted with 250% of float. I will now give you the example. If let's say you were smart enough to short GameStop 5 years ago, if you shorted 1 million shares of GameStop, at the time it would have been about 1% of the float. But because GameStop has been buying back their own shares over the past years, especially last year when they bought back 35% of the shares outstanding, Now the total number of float is lower. Today, if you want to take your profits on that investment, of course you will need to take your profits. How do you take profits when you're shorting a company? It's by buying back their shares, because this is what shorting is about. There are shares here, someone else's shares. You want to short the company because you expect the stock price to go down. You're going to ask those people to lend you their shares, and then you sell the shares, and then you buy the shares at a cheaper price. You return the shares and you take the difference as your profit. Of course, you pay those people who lend you the shares a fee, a sort of interest. This is how shorting works. The same thing will happen with GameStop. All those short sellers will need to take profits. What's the use of shorting the company if you're not going to take profits? When they take profits, let's say that 1 million shares we talk about, at the time 5 years ago it was 1% of float. Now if you're going to buy back those shares, it's going to be 4.5% of float. The more the short sellers are going to take their profits to buy back their shares, the more the stock price will go up. And when the stock price goes up, those short sellers now, they want to take their profits as fast as possible, maximum profits. And they send the stock price even higher. And because there's a lack of shares available on the market, this will create a short squeeze. The short squeeze is inevitable in my opinion. There is only one way you can avoid the short squeeze right now. If the short sellers, those hedge funds, they try to make a deal to take the company private. But again here, if you want to take the company private, everybody wants to make profits. Ishfaaq Capital started buying GameStop in 2011, about $20 a share. I don't think they want to take the company private at $10 a share. Maybe they want it 25. So if you bought GameStop at $3 a share, you're making a profit. So the probability of me making profit on GameStop is quite high. This is what I see. I used to say it is the riskiest of all my investments, but now I don't see it risky anymore. It's not really risky. It was volatile, but it is not risky. It is a safe stock. If you want to know more about how short selling works, about the GameStop short squeeze, I recently made a course about stock investing for beginners where I explain how short selling works, and I also have on my research partnership the whole analysis of GameStop. Just for a moment, let's ignore all technical analysis, because the short squeeze, this is technical analysis. I'm not a technical analyst. I'm a fundamental analyst. Let's ignore that. As a fundamental analyst, I'm going to look at the intrinsic value of GameStop. And the way you calculate the intrinsic value is by looking at the future cash flow that the company can generate. And when I look at the business, and have looked at that since last year, I see that GameStop has an intrinsic value about $1 billion US. So that would be equal to about $20 a share. So that's why today I see that the intrinsic value of GameStop should be about $20 a share. But whenever you're buying a company, you need to take a margin of safety. With GameStop, the margin of safety should be quite big because it is volatile. Anything can happen, even though the company will not go bankrupt anytime soon, because you cannot go bankrupt when you have more cash than debt and all your debt is after 2.5 years. Still, this is quite volatile business. Anything can happen. So you need to take a quite large margin of safety. Even if you take 50%, the stock price of GameStop, that the limit you would put to buy is $10 a share. So today, if the stock price is $7-8 a share, it's still a good investment in my opinion, because it is lower than the intrinsic value after even taking the margin of safety. So that's why. And now you may tell me, why would anyone buy the shares at $8 if you could buy a few months ago at $3? It's because now it's less risky. Day by day, the stock is becoming less risky because the launch of the PlayStation 5 is coming soon. And also the time frame. I have been investing in GameStop since last year. So I had to wait more than 1 year now to make a really good profit on GameStop. But people who are now going to buy GameStop, they will make less profits, but in a less period of time also. For the time being, if I see the opportunity to buy more GameStop shares, because it is volatile, there are days that I believe it can go down by 10%. If I see that happening, maybe I'm going to buy more shares of GameStop. But as far as my exit strategy is concerned, like I told you, there are multiple scenarios that can happen. If it goes, let's say, private at $25 a share and the shares is $23, I can still hold because I will be making money by arbitrage. If now, let's say, the short squeeze happens, it goes to $25-30 a share. One thing that we need to consider is the days to cover, because right now it's 17. We need to look at the volume, the average volume on the stock, the average volume being traded, and how much shares outstanding are being shorted, how much float is being shorted. And then we calculate how much time it will take for the short sellers to cover their position. And right now with GameStop, it is 17. This is a record. No company in America has such a high days to cover ratio. It's also called the short ratio. So 17 days. So if even the short squeeze is happening, it's not happening yet. When it happens, you can still hold the company for even more than 17 days, because when it goes up, other investors are going to buy, new investors. So you can still hold the company. That doesn't mean that when you see the short squeeze, you sell immediately. And I have the plan about all of this. I know exactly what I will do when whatever happens, but I cannot tell you because there's so different, so many scenarios. And also Ryan Cohen investing in that company, this is a new scenario I did not consider before. The fact that they were going to buy back 35% of shares, I did not consider that before. The fact that we will be having a pandemic, I did not consider that before. The fact that we are going to have a proxy fight, something I did not consider before. So of course, again and again, there will be new factors coming in that you need to consider. But as long as you have a plan, a good plan, I don't think you need to worry. And it's not just about GameStop, it's about any other company. But for GameStop, it is a little more important because of the volatility of the business and the stock. So let me know in the comments, what do you think about GameStop? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos here if you have missed them. Have a nice day and goodbye.